Jan, let's talk a little bit about what the tariffs mean, because we're headed into earnings season. But you were just saying off camera, nobody knows what to do at this point because you don't know how long the tariffs will last, how big of an impact it will have, and what it'll mean for the consumer.
Yeah, when I talk to my clients, they're like, well, what are we going to do? We don't know if the tariffs are going to go on in 60 days. If we put tariffs on $325 billion more, we look at it and say, well, that pretty much wipes out retail earnings for 1 year as far as growth goes. And so they look at it and say, how do I judge these stocks? Because the performance that we've seen so far for the first quarter in retail is coming in pretty good. And I suspect as we see the next 10 or so that I've got on my list here report over the next week, week and a half, they're going to be solid. But people are still going to look at it and go, well, I don't understand what they're going to look like once the tariffs go into effect, if they do. And my thesis is we won't get the tariffs, and if we do, they won't be for very long, and this will all work its way through. But if you got them for a long time, there'd be an enormous dislocation, and you'd have to start changing your supply chain. But what we won't see, which is what everybody that comes on this air talks about, is the consumer paying this, because there's a worldwide oversupply of product, and you can't raise prices. We've seen falling. If you buy a pair of chino pants right now, 10 years ago versus today, the price is down 40%.
Wow.
That's what's been happening in retailing. We're not going to pass it through. We're going to find out that the consumer either substitutes or just doesn't buy. And so these retailers are not going to say, oh, 25%? Yeah, we'll just hand that to the consumer. Not going to happen.
So this is important because you're hearing two very different narratives. One is it's all passed on to the consumer. We're going to face higher prices. The other one is no, the consumer is going to resist, and it's the company's pricing power that disappears. You on the second?
On the first 200 million or billion, even though we've seen people do studies that say it gets passed through, have you seen any increase in inflation at the consumer level? No. The companies are either absorbing it, the Chinese factories are absorbing it, and it's getting absorbed in this supply chain, but it's not getting passed through.
That's because it's a temporary issue at this point, too, and I think people look at this as you just said you do, as not being a long-term effect.
Well, look what happened on the tax bill, right? We said, gee, there's going to be inflation. I didn't, but other people did. What happened is Walmart turned around and gave all the money back to the consumer, and everybody else had to follow suit. And so there was no inflation driven through because of the decrease in taxes. All the retailers basically started giving it back, either in service, in salaries, or to the consumer in price. That just is going to be the same kind of pressure we see when the tariffs go up. The guys that are most efficient, like Walmart, like Macy's, like Kohl's, all the guys that Home Depot, Best Buy, the people who are really good at what they do, they're going to just crush down the pricing and drive everybody else out of business.
Can I ask you a question? This is Goldman Sachs just a week ago. The cost of U.S. tariffs have fallen entirely on U.S. businesses and households with no clear reduction in the prices charged by Chinese exports. Second, the effects of the tariffs have spilled over noticeably to the prices charged by U.S. producers competing with tariff-affected goods. Now, they look at the impact of tariffs on CPI, and they say it is clearly visible when you look at equipment that is what they're calling the 9 tariff-impacted categories. They would include appliances, furniture, bedding, floor coverings, auto part materials, et cetera. You think that Goldman Sachs is 100% wrong here?
I do. I read that article. I don't see it happening. There's been some temporary blips in pricing, and then it gets pressed right back out as the consumer substitutes and as the product moves.
What about in washing machines? Like, that seems like the one area where pricing went up, not only for the guys who were importing stuff, but other people were able to maybe squeeze prices a little higher.
It happens to be one of the areas I know really well because I advise a company that's involved in that space. And that is one of the few places you've seen it because there wasn't substitution in supply yet.
Right.
But there will be. We are going to see even that pressed out. But in everything that I deal with, like apparel, accessories, you know, handbags, shoes, all the things that are substitutable and all the things you don't actually have to have. You have to have a washing machine.
What about the argument that even if consumers aren't paying for it because they're not buying, that actually we're paying for it in that we're not buying, meaning that those U.S. companies and retailers in the United States ultimately are going to struggle and suffer as a function of it?
Well, that's what I believe. I believe what you will see is the retailer struggle, not the person on the street that's buying product. They're going to find.
But then we're talking about the person, but the person on the street is the guy potentially working at the store who's no longer working at the store.
Well, that can happen. I didn't say it was going to be painless. I said it's not going to get passed through to the consumer. It's going to get absorbed in the system, and that means people's earnings go down. That's why I've said if this goes on, we wipe out a year of earnings growth in retailing.
Jim, very quickly, would you buy any of these stocks ahead of the earnings, having said all of that?
Well, I would still like to own Macy's right now, Kohl's right now, Walmart right now. I still like Home Depot and Lowe's. They're not going to get hit hard. So, yes, you can still own these stocks, and when they get whacked because of something going on like tariffs, they're a buy, as long as you're a long-term holder. But traders trade.